Okay, we are live. Hello, everyone, and welcome back to the BTCfi Summer Hackathon Workshop Series with Core. I'm James from DoraHacks, and today's topic will be unlocking Bitcoin DeFi, non-custodial BTC staking on Core. So it's a really great topic for today's workshop. I'll just give a quick bit of introduction for any of you who don't know or haven't been following the series. This is the fifth episode in the series, which is running alongside the BTCfi Summer Hackathon, which is live now. There are about 11 more days, I think, left. So if you're a BTCfi or Web3 developer, you want to get involved, then check out the link in the comments, which we'll put there to the hackathon page. You'll be building dApps on Core, so there's been some really cool projects built so far by hackers. There's still time to get involved, and there's a 250k huge prize pool with 30k USD cash up for grabs. So in the prize pool. So definitely check out the link if you're interested, if you're a fan of the BTC ecosystem and want to get involved. So DoraHacks is the largest multi-chain hackathon and developer incentive platform. We've been doing hackathons for about 10 years, but this is a really great installment, and we're really proud to be supporting the team at Core with this summer hackathon. So I will hand over now to Wayne and Ramil from Core, and they can go ahead with the workshop. And just before they start, can I say, if you're listening live, feel free to ask any questions in the chat, and I will ask them to the Core team at the end. So over to you, Wayne and Ramil.
Hi everyone, I'm Ramil. So today it's our workshop number 5. We are discussing about the unlocking Bitcoin DeFi, which is the major topic is the non-custodial BTC staking on Core chain. However, with the technical advancement onto the Bitcoin side and through the innovative and through the robust ecosystem, Core present a promising opportunity to unlock the dormant potential of Bitcoin liquidity, which is one of the most outstanding feature of Core that differentiates from other competitors is that one of non-custodial BTC staking. Core welcomes BTC holders to stake their BTC on the Bitcoin network with the introduction of the non-custodial Bitcoin staking. Also, the recent protocol updates include with the Bitcoin holders as the third part of the Satoshi Plus consensus mechanism. I have with my colleague Wen, he will go through it completely in detail, in-depth knowledge of to the non-custodial BTC staking, how actually it's working, what are the benefits, what are the rewards, how actually it works under the hood. So over to you, Wen.
Thanks, Ramil. Hi, everyone. So I'm Wayne. I'm one of the contributors at CoreDAO, and my general, main responsibility is on the product side. So I'm very excited to be here talking to everyone, and hopefully to the future core builders right here. So you guys hear me okay, right?
Yes, we can.
Cool. Thanks. Let's start. So we all know that Bitcoin has the largest market cap among all blockchains and has more than $1 trillion locked in Bitcoin value locked on the blockchain, right? And then it's by far known as the most secure, most decentralized, and probably the best blockchain to store as a storage of assets. But nonetheless, unlike a lot of modern blockchains and unlike Ethereum, right, it lacks smart contract support, some kind of staking yield. It doesn't have a native financial primitives and is not very highly scalable. So Core is actually, its mission is to really like be the most Bitcoin aligned blockchain of Bitcoin, and then trying to onboard billions of people onto Bitcoin. And how we do that is we strive to fill the gap of Bitcoin. We want Bitcoin to continue to be the most secure and decentralized chain and remain as is to be the best location to as a storage of assets. And what Core wants to be is the financial settlement layer for Bitcoin, where we already have provide all the most modern blockchain components of staking yield, of the smart contract support, which is EVM competitive, like highly scalable, high TPS, and then with all the native financial primitives already in place. So here's some stats of Core. And on the right side, you can see that we have 2.3 million of Twitter followers and 266,000 of Discord members. And then on the left side, you will see that we have 90 million of core addresses and 263 million of core transactions. We have a very loyal or large following of community, and it's because Core actually did a fair launch where when it was launched in early 2023, we distributed the tokens to a large number of addresses so that we had a fair launch. And that really what we believe is in the ethos of decentralization, we believe that it should be in the hands of a lot of different people which can help secure our chain. And we are EVM compatible, highly with high throughput, which means so you can see that we have a lot of addresses and we have a lot of transactions that we can support. In the middle, you will see that we have 56% of Bitcoin hash that's currently delegated on Core, and 265 million of Bitcoin that's staked on Core. And what does that mean? So to go into that, we need to probably talk about what's unique about Core, which is this Satoshi Plus consensus mechanism. So very similar to a delegate proof of stake model like a BNB, where how Core works is that we have a set of validators of 30 validators, and then each day 23 validators will be selected through delegations, and the delegations, and then these subset of validators will take turns to validate and produce the blocks, and then there will be a new set of validators every single day. And how these validators are selected, similar to a regular delegate proof of stake model, the core stakers can stake their core and delegate their core staking to the different validators that they believe are the most appropriate ones. But different from the regular delegate proof of stake model is that we actually added additional two components, which means is the delegate proof of work, which means that the Bitcoin miners can actually delegate to core validators as well. In addition to that, we have this non custodial BTC staking, where Bitcoin holders can actually stake their Bitcoin and then delegate to validators as well. And together with these three different components, we have a hyperscore that we calculate to decide which are the validators. And in exchange for Bitcoin miners and Bitcoin stakers help securing the core chain in participate in the whole validator set delegation hyperscore, in exchange they receive a reward from Core's consensus models. So this is how Core's Satoshi Plus consensus work. And as I mentioned just now, we have 56% of hash rate that's currently delegated from Bitcoin to Core, and $265 million of Bitcoin staked on Core. And these delegation through the Satoshi Plus consensus model, and they receive reward in exchange through Core's consensus model. So how does Bitcoin staking works? Since the focus of this workshop is non-custodial BTC staking, essentially, if you look at this picture or graph image, you're going to see Bitcoin on one side and core chain on the other side. And how it works is that as a Bitcoin holder who has Bitcoin on the Bitcoin network, they can voluntarily stake their Bitcoin on the Bitcoin network. And how that works is that within the Bitcoin technology, there's a time lock mechanism where Bitcoin users can voluntarily tell the Bitcoin network, say, hey, I'm going to voluntarily lock up my Bitcoin for a period of time. And by executing such a time lock transactions, Bitcoin will not allow the user to move the asset to use to actually do anything with the assets. The asset will be locked and not usable all the way till the time expires. And within the time lock transactions, what we when they construct the transactions, what they do is they actually in the OP return, which is like a location where they can leave message on this time lock transaction, they can leave down the core validators that they wish to delegate their staking to, and also their core chain address where they wish to receive their consensus reward. And that's all they do. And the Bitcoin will continue to stay inside the user's wallet. All they do is they voluntarily lock it up and do an action of delegation. And in return, because they vote for the validators, Core will go to Bitcoin network and retrieve those data, identify the attribution of the delegations and attribute those scores in our hybrid scoring calculations. And in return, every single day, in the output of a consensus reward, we will send those consensus reward tokens to the core chain address that's specified by the users. So that's really how it works. And in between, you can imagine that within the Bitcoin network, they have no idea what happens on our core chain. All the Bitcoin users do is they leverage a transaction inside Bitcoin to execute it, and Bitcoin network just simply execute it without knowing anything happened on Core, and Core is retrieving the data from Bitcoin. So what does that mean? So as I mentioned, the yield comes from the Core block rewards. It's not like Core has absolutely no control over those Bitcoins because they stay inside your wallet, and there's nothing much Core can do. And the reward comes from Core's consensus model. And all block rewards are paid over 81 years. So it means that, it has the duration of 81 years that can attribute these Core rewards on a daily basis. And these yield, unlike other potential offerings of Bitcoin staking, these yields are not from liquidity incentives. And the model here is there's a line incentive right here where Bitcoin holders help secure the Core, and Core give them reward. That's an incentive alignment where we believe are crucial for Core to be the positioning in terms of the BTCfi positioning. So here, non-custodial Bitcoin staking. Again, if it's your key, it's your coins, right? So in the whole process, Core never knows your key, never have access to it. Our code are open source that anyone can go and take a look at it. Our code are being audited properly, and we are being trusted by large institutions like Valor to really they have do the due diligence and check it and to confirm that it is indeed non-custodial and safe. And all the actions of the Bitcoin staking happens on Bitcoin, and Core never actually had any access to it. And this also means that it's for the first time, Bitcoin becomes a yield-producing asset where it's entirely risk-free for the Bitcoin users. So essentially, Core has created a Bitcoin reference rate. So what does that mean? So I guess in the financial systems in regular, this is like risk-free U.S. government bond rate, where U.S. government is considered the most safe, that they will guarantee that the yield that they promise, and they'll always give it to you. And from an investment point of view, if an investor is doing the investment, they should consider whether or not this investment generate more yield than this government bond rate. If not, then by default, everyone should just invest in the government bond because that's risk-free. And in any scenario, if two yields are the same, you should always go with the one that's lower risk. So what Core did right here is, with our Bitcoin reference rate, all Bitcoin investors, if they want to deploy their assets investment on any let's say DeFi protocol, what they really need to assess is benchmark against Core's reference rate. If it's equal or less than Core's reference rate, then it actually makes no sense to invest in anything else but Core's consensus, Core's non-custodial BTC, because it's the baseline, it's the benchmark. And what we did right here is we provide a market reference rate for all the investments. And if there's a yield that's higher than Core's reference rate, then it's up to the investor to really assess whether or not the additional risk that they're taking is worthwhile of the extra yield. And one of the things that we want to say right here is emphasize is like from I hope like I was clear enough that you understand where the yield comes from, and with the transparency that from core side, if anyone's participating any other yield that if you don't understand exactly where the yield comes from, most likely the Bitcoin that you hold is the way that they generate profit, and your Bitcoin is exposed to some kind of risk to generate that kind of profit. And so in a way, it's no longer a risk-free product. So that is the differentiator from how Core's non-custodial BTC staking versus potential others offering. So with this risk-free offering, and we know that institutions they care about risk a lot. So by offering such a risk-free product, that we were able to partner with Valor, who launched the first yield-bearing Bitcoin ETP, where user can on the exchange buy and generate yield over that. And on top of that, with our relationship with Valor and this trust, they also launched a Core ETP as well. So as we sort of mentioned in the sense that Core is using Bitcoin's security by having Bitcoin miners to delegate a hash, by having Bitcoin stakers to delegate their Bitcoin staking, and then in return we have this native yield of like alignment where Bitcoin stakeholders help securing Core, and Core providing Bitcoin stakeholders a native yield. But that is sort of positioned us as like in my belief, in our belief is like to become the most BTCfi. To become the most Bitcoin aligned blockchain, and to be have a sustainable and long-term symbiosis relationship, the incentive has to be aligned, and we have built this fundamental building blocks to really structure that alignment. And on top of that, Core has as far as I recall in DeFi Llama, we have 41 protocols. We are very active building communities who are very eager to build on top of Core. And at this moment, we have native DEXs as well, lending protocols. We have perpetual futures, and it's growing rapidly, and it's a very vibrant ecosystem where we believe are well positioned against others in terms of offering the best BTCfi experience. So looking forward, what are we looking for beyond this non-custodial BTC staking? And what we are in the works right now is provide liquid BTC staking. And once it's launched, it will provide a liquid staking token where holders can continue to earn the yield of the non-custodial BTC staking. At the same time, they can deploy such assets in different our BTCfi ecosystem, and then participate in additional DeFi utilities, and potentially earn additional yield, or really deploy their asset in different investments. On top of that, we are also looking at how can we enhance our Satoshi Plus consistent mechanism to enable BTC restaking. Core has been up since the early 2023, and it has proven battle tested that it's secure, it's never down. And we have such a great a model, and then we look into how can we redeploy these BTC to restake and help secure other blockchains, and in the process generate additional yield for the stakers, so that they can be a long-term outlook and sustainable incentive models. And in addition, that will enable us to really provide more customized, specialized chains that may not be suitable to deploy on Core. So to wrap it up, I mean, so Core, we welcome builders to build on Core, and then Core has its own venture networks, has different marketing investors, and we have partner exchanges, and we have Bitcoin staking on the staking side, and really looking forward for more builders to come up with cool ideas, and to be on Core, and hopefully to grow Core together.
Perfect.
Ramil?
Yes, let's move to the Q&A and to the summary part. So there is a couple of questions for you, Van. Can you please shed more light on how first yield-bearing BTC ETP will unlock more opportunities for BTC holders?
Sure. So in a way, like I'll non-custodial staking is 100% permissionless. Anyone can participate, but not everyone necessarily have. In a way, the ETP provides a broader access to more audience, right? So potentially, some people may not want to move their asset to a decentralized, let's say Bitcoin and stuff like that, and now they can on the market through a ETP have access to this yield-bearing Bitcoin, and we believe that that will help educate users and also attract more potential investor who is interested in such products. And overall, I think it's a positive directions for core and for Bitcoin or any investor in Bitcoin.
Perfect. Another question is that is there any specific minimum requirement for non-custodial staking on core?
Yes. So in a way, like because of transaction fees, because there are costs on the Bitcoin side when to do a staking. So we during development we realize that if you stake too little or if you stake too short, the reward that you earn may not cover the gas fee, and we want to make sure that users don't accidentally do that and end up with loss. So we decided that there's the minimum of 0.01 Bitcoin that you have to stake and a minimum of 10 days. And really that comes from, we think that it will be, if we structure it that way, it will be dummy proof and everyone won't, at least will be benefit. When they participate in our non-custodial staking, we want them to earn the incentive, earn the reward, and we don't want them to end up with loss. And that's why we structure it that way. Aside from that, there's really no specific restriction from our end that for that purpose.
Perfect. So, what are the future developments that in our community can expect for BTC staking on core? What are the new features and development is there?
So I think I mentioned just now like the BTC LSD, and that's something that in a way, So liquid staking token, and right now, if in our current model that if for users who wish to keep their Bitcoin on the Bitcoin network for the maximum security, they can use our non-custodial BTC. But if they are interested in participating in our BTCfi ecosystem, then really our Bitcoin LSD will be the ideal choice once it's launched, where they can continue to earn this yield and have this liquid token where they can deploy based on their interest or their investment profile. So that is huge in our opinion. That will unlock a lot of either like you have to choose whether or not to go with non-custodial BTC, or you have to choose Bitcoin LSD. But you have to choose either to earn the yield on a non-custodial BTC staking, or you have to choose to participate in our BTCfi ecosystem. But you cannot have both. And our Bitcoin LSD will unlock that by enabling users to enjoy both sides of the world. And then in addition to that, what I mentioned is the Bitcoin staking, where we can, we have this we using Bitcoin to secure core, and then there's the appetite that we understand in the market that want to sort of reuse this security. So that we think we have a very Storage Plus consensus mechanism is in a good position to really do the restaking and help secure other blockchains and really provide us more flexibilities down the road. And that's in the works right now. We are actively exploring that. So that I think the community can look forward for that to come soon.
Perfect. So let me give the overall summary of the non-custodial BTC staking. So number one is about that it is designed especially for the kind of long-term holders and institutions who have shown a clear preference for keeping their assets on the Bitcoin blockchain. Second one, there is no new transactions are added there. User can stake their Bitcoin as when mentioned that without moving it off the Bitcoin blockchain, thereby maintaining the why it is happening and how it actually is securing. Because of the high security and the trust that comes with Bitcoin robust infrastructure, your asset will be onto the in your custody and it will be on Bitcoin blockchain. It also gives you the opportunity for all the Bitcoin holders to earn passive core token rewards in exchange for contributing to core chain consensus protocol, which when mentioned into the slides that we Satoshi plus consensus, which is the combination of the three parts. One is delegated proof of stake. Second one is about delegated proof of hash, and the third one is about non-custodial BTC staking. So non-custodial BTC staking for the Bitcoin holders, they can stake and they can get a rewards in terms of the core token. Fourth point is about your self custody. That it is completely self custody and 100% secure. User only need the send the transactions themselves, the staking transactions on the Bitcoin network and the BTC assets. They do not need to leave the Bitcoin network at all actually. And the function implementation that is happening on core side, the non-custodial BTC staking is natively cryptographic features of the Bitcoin network. There is no new thing is there. It is completely a native Bitcoin network cryptographic features, and it is fully bettered and tested and safer than all other non-Bitcoin value solutions. So user can build the transactions in any way with any tool they prefer. It is highly not possible to encounter supply chain attacks from untrusted, unverified third-party libraries. So it is a quick summary for all of our listeners, builders. So you can participate into the non-custodial BTC staking. You can stake your Bitcoin and earn a massive reward in terms of to the core, and also you can earn a very good reward from the BTCfi Summer Hackathon. The total prize pool is around $250,000. There are 11 days is remaining. 21st July is the last day for the submission of the project, and there are multiple tracks. There were cash prizes, vouchers, starter kit from course side. Our those who will win the winners will get the exclusive support from our BD, from our growth team, from our marketing team. So there, once your project will be announced as a winner onto the demo day, from after that there will be the next stage is that you will be get a complete support from our side, from our BD, that they will mentor you for your project. Feel free to ask any question or anything into you have any doubts related to the features about to the hackathon. We have a 24 by 7 support on our Discord forum. You can reach out to us anytime. Our tech ops team will help you on there. Thank you.
Thanks.
James.
Thank you, guys. Thanks, Wayne and Ramil, for that fantastic workshop today. And thanks everyone for tuning in to listen. As Ramil said, feel free to ask any questions either in the chat here, and we'll get them handed over to the core team. Make sure you're following core on all their socials, join their enormous community, and keep up to date with DoraHacks as well at DoraHacks, because we have a number of other hackathons and workshops in this series coming up soon. So as he said, the BTCfi Summer Hackathon has 11 days left. So check out the link in the comments. And thanks again to Wayne and Ramil at Core. Look forward to seeing what the hackers are building in just over a week and a half.
Cool.
Thank you.
Thank you, everyone. Thank you. Bye-bye.
Thanks, guys. Looking forward to the next one.
Bye-bye.
Bye.